You get to learn something, so get a free member account if you don't already have one, and take advantage of that as we still have that available. Each time the market turned around and came back up was an opportunity for us as traders to take advantage of a retracement and a continuation. There's a couple of rules that I like to go by when I do this, and some of you may have already seen the videos that I have. I do this every year. This year is no exception. I put a video out in January, then another one in March, I think in the middle of June, or middle of summer, and here we are. Actually, the last video I put out was showcasing, I believe, is this, and I was recommending a good buy opportunity. But we have to be careful because it's not going to work every time the way that we expect. So here are the rules on what I'm proposing. Whether you're using the E-mini, the Dow, the Russell, it doesn't matter. It really is the same. The first thing that we're going to focus on is whether or not we've made new highs in the market. And we have made new highs. We made new highs here, we made new highs here, 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 here. Rule number one, do we have a new high that was made previously? Answer is yes. Then I look for at least 3 to 4 candles or days that are retracing and reversing, and it looks like as if everybody is panicking. So the last instance that this happened was the last 3 days. I'm sorry, the last red days that we see here. Okay. So at least 3 days, preferably more, obviously, but the minimum is 3 days where it's a clear retracement of some sort. It can't be a chop, has to be a clear retracement. So for example, this doesn't count right here. It's not enough information. This here is perfect. This here is perfect, right? Let's take a look here. This I would not count. I think it's a little bit, well, maybe this here, if anything, but that's it, this right here. When I look at least 3 days that are retracing, here's a nice big one over here in April, markets retracing. When I look at that, I see an opportunity, but where we enter specifically is key because we just can't jump in and the market's going to continue lower and lower and lower. So what I like to do is I like to look at first the market returning back up and breaking at least 50% of this move, of this retracement, of this pullback. I have this tool here that I'm using. It's called the Fibonacci retracement tool, but I don't use any of the Fibonacci values. I remove them all, and I have only the 0, the 50, and the 100. And so when I look at that, I think to myself, I don't care about the Fibonacci values. Specifically, this is only being used to show me the midpoint. And you can eyeball it too. A lot of traders eyeball it as well. So eyeballing it, this tells me that as soon as the market breaks 50% from the high, from the retracement, it's on its way back, fantastic. That's only part of it. A lot of traders, as I teach this year after year, they love to just jump in right away. I think that the better choice is to at least let the candle close, enter after a couple of points. It's broken above the midpoint, enter on the open of the very next day, wait for a green candle like this green candle here to show you that there's a lot of long traders now buying back, or the sellers got stopped out and they're buying back. So there's a lot of ways that you can look at this, but more importantly, wait for the candle to break the 50% mark, and then we can take advantage of the entire move up to test the highs. And that's really important because markets love to test the highs. Many times markets will do double tops, but it's happened so many times over and over, it's almost like clockwork. The testing of a high is almost built in, it's inherent, it's how the markets work. So if it made a new high here, it at least wants to test it sometime into the future. So, and that's what I'm looking at. So when I see this here, I made a new high, the market retraced, 50% is somewhere probably right here in the middle, and now I can take it back up to test the highs. That's a great way to take advantage of these trades. Now this is swing trading, and this you can do it during the day, and it may take some time for you to see a result because you have to hold on to this for at least a day or two to really see big moves. But this is a huge move. This from here to here, 56, I think it's a great move. The other thing you can do is a pop. They have something called a stochastic pop that is almost for the old timers when you look at trading analytics. I'm not using stochastic pop at this point. All I'm doing is saying once the market breaks the high, expect it to pop. And what that means is usually there's a force of all the traders that were short getting stopped out, and it pops in the opposite direction. And that's exactly what you're seeing happen. It's happened as soon as the market hit the high, it went a little bit higher. Now, what's a little bit higher? 20 points, 30 points? I'll take 20, 30 points any day on any market. So this is an opportunity now for you to see how we trade price action looking at these type of rules. It's not gray, it's very black and white. And what we are going to expect as we get into the end of the year, remember we still have an additional 2 months left in the year. Wait for the market to give you at least 3 days of a retracement or a reversal. And then if we see that, once it starts to come back up, immediately on maybe day 1 or day 2, put that 50% retracement tool. You can do it. You can even eyeball it. You don't even have to use this tool. And every charting platform has it. So it's not just NinjaTrader. You can probably get this and find this anywhere. And then as soon as it starts to go up like this, you're in. You're a buyer with your goal being right at the high, testing the highs, because we made a new high right here. So it's going to want to test that high, and then once it breaks the high, pop, you're going to see it pop higher. Mark my words, you're going to see this happen at least one other time before the end of the year, at least. Now, the market may go up a little bit more and then plan this out. But regardless, wait for 3 or 4 days and it'll return back. Anyone have any questions on that? Raphael, Leo, Chloe, Mia, Justin, Noah, Diego, Lucas, Mateo, James, Mats, Mike, Simon, Stephen, Douglas, D, Walter. All right. If everyone's good with this, I'm going to break this down now. I'm going to show you something completely different. Everybody ready? Want to learn more? Visit DayTradeToWin.com and get started with a free member account, which includes access to our trials, including the ABC software. Start learning the right way by using price action and avoid using conventional indicators. We offer unique strategies and proprietary software, including the Sonic system. Join Accelerated Mentorship and get instant access to all our software. Let's get you set up in the next training.